Hello and welcome to ETF Pulse, ETF.com's vodcast. I'm your host, Kristin Myers, editor-in-chief of ETF.com, here as always with my co-host Nate Geraci, president of NovaDius, formerly known as the ETF Store. If you heard our last episode, you would have heard that we've had a bit of a brand name change for the ETF Store. So now new name NovaDius. Let's take a quick look at the Pulse rundown. So markets were back close to some record highs until we got more tariff talk from Trump. So we're going to be looking at how that's been impacting the ETF market. And ARK Invest has filed for 4 new buffered ETFs that offer up to 50% downside protection. We'll be chatting that and what that could mean for some investors. And the SEC has also taken its first steps towards rules governing crypto ETFs. And to keep the crypto train going, we'll be chatting a little bit about Trump's media company that has filed for its 3rd cryptocurrency ETF. So a pretty packed episode today. I'm actually really excited to hear what you have to say about some of these topics, to be quite honest with you. Nate, how are you?
I'm doing great. I'm ready to go. I've got hot takes in the hopper.
All right, so
as always.
Let's start with your favorite, which is Trump and tariffs. I know you've been a broken record on this, but okay, so just as a quick bit of context, I'm going to share what he shared on Truth Social. I don't know if your true thing when you're on Truth Social, if it's called you truthed, like you tweet, but anyway, here's what he had to say, quote, "As per letters sent to various countries yesterday, in addition to letters that will be sent today, tomorrow, and for the next short period of time, all caps, tariffs will start being paid on August 1st, 2025. There has been no change to this date, and there will be no change. In other words, all money will be due and payable starting August 1st, 2025. No extensions will be granted. Thank you for your attention to this matter." So no more extensions, because this whole time since April, we have had pause, extension, deadline moved, but I guess in about a month, that's all over. Tariffs are officially here. We made it a full, 7 months of the year without having to worry about it, but it completely sent markets in the opposite direction. Because as we were mentioning, when you and I were talking about the show, when you had said, let's talk about record highs, we were near record highs, and how quickly that has now changed thanks to the tariffs.
We're still only a point or two off the record highs. I'm still in the midst of my extended victory lap for calling the entire tariff situation perfectly. And I would dispute what you were saying, that we know that there's now a final deadline in place. Do you really feel strongly about that? This could all change. We may get a post on Truth Social. I'm going to call it post, not a truth for sure, that there's another extension. So I am a broken record here because there's no way that you can handicap anything around the tariff situation intelligently. And I've actually been pleasantly surprised, because I was very critical of a lot of the quote unquote smart money out there, who I feel like, not everybody, but a lot of them wrapped politics into the whole tariff situation instead of just saying, how does Trump typically operate? And I feel like those people have now come over into my camp. They've joined me in my extended victory lap and realize that you can't gauge any of this.
Yeah.
You can't intelligently predict this. So that's maybe not a hot take.
I think it's a smart take, honestly.
Yeah. And it's the same take I've had all along. Something else that I think we should mention, we can talk more about the tariffs if you want, but think about everything that has happened this year. So obviously the tariffs and the trade war. We've had the Israel-Iran conflict, which the U.S. momentarily got involved with. You may think back, I think it was in February, we had the DeepSeek situation in China. Remember that, with the artificial intelligence startup? And there have certainly been some other things. Yet you look up and stocks are right near record highs. So yes, we had a small pullback, but we're right there near record highs. And it's exactly why I say nobody knows anything. Can't predict this stuff.
I actually think, to your point, so one, you make a very good point. I actually don't know if August 1st is the last deadline. I don't know if the White House knows.
Yeah, nobody does.
We've seen so many things. And I don't think the president himself knows because things are changed at a whim.
He
And
probably doesn't.
so that's one. Two, I actually think there's a bit of fatigue around tariffs and the headlines. And so to your point, I think while at first tariffs were very much a real threat to the markets, and to, some even like broad market ETFs that we had seen, I think that that would have been true if we had stuck with like that April 1st deadline and we had seen tariffs kind of take effect and then we had seen it kind of come up in following inflation reports, right? And you could then start to see exactly how tariffs are starting to impact the economy. I think then we would have had a real measurable impact on the market and you might have maybe said, okay, maybe we need to start making some pivots or changes inside of portfolios to adjust, right? To get more defensive, mitigate some of the downside risk. But I think, again, with these markets nearing these record highs, I think that, yeah, you're just going to see, of course, markets take an upturn or a downturn depending on the headline around tariffs for that particular day. But I think at this point, investors are just like, I'm tired. I can't. I think they've, even if they didn't agree with your original, the point that you've made literally since March at this point, right? You can't invest around tariffs. I think that even the naysayers or the ones that did think that you can invest around tariffs are now coming to that conclusion.
100% agree.
They
You described it
absolutely.
perfectly. Yeah, we went from tariff tantrum to tariff fatigue. That's exactly what has happened. And I think people, again, I do think people let some of their political bias get wrapped up into this instead of just looking, think about the art of the deal. Like this is just how Trump negotiates
Yeah.
things. And so you just have to understand that. The other thing that I'll say, I don't want to, I'm always longer term bullish on the markets. I think you know that my bias is always to the upside if we look out over a longer term time horizon. But I think even here in the shorter term, I think there's a lot of optimism in the market still around the whole artificial intelligence theme. I think more people are coming around to just how impactful that could be to nearly every industry in terms of boosting productivity and increasing quality and cutting costs and those sorts of things. So you have that theme running, which I think we're still in the very early stages of. You mentioned inflation. Inflation, the numbers, we're relatively under control, at least from the Fed's perspective. And I do think it's possible the Fed could chop rates a time or two before the end of the year. That's going to be a tailwind for the markets. And so I don't necessarily want to say we're in a Goldilocks situation right now, but I think it was easy to take all the tariff headlines and really get negative and spun up about it and not peel back and look at the bigger picture. Now, I'll caveat that we can move on. There are some negatives out there, right? We've talked about
Yeah.
how stocks are valued on the higher side historically. We can't just ignore that, but that's also been the case for a while now. There is still pretty significant concentration in the major indices with a lot of the big mega cap tech companies still comprising a huge chunk. And those are the same companies that are valued on the higher side. So that's something to watch. And even with the tariff situation, we don't know how this is going to play out. And so when you have uncertainty, again, I don't think this is something that you can invest around, but yes, it's possible that something happens around tariffs that could be a negative for the market. So it's not all, sunshine and rainbows, but I think the markets are in a pretty good spot right now, and we're seeing that in stocks. S&P's up about 7% this year. It's bounced about 25% since its low in April. It's been a good run.
I think I'll be curious to see how long that continues because I don't know about you, but anecdotally, I've seen so much about like recession indicators popping up more and more, just even on like social media, videos around various leading indicator and even interesting and weird indices that are like flashing red lights, right? Like the casino index, the Vegas index rather, how people are spending, pure discretionary money. There's actually like the strip club index that I saw the other day. Like this is just pure discretionary income that has actually been flashing red signals about the US economy and the strength of the US economy and really signaling that there could be a recession. But there's tons of these, right? Like the lipstick index. And then I even saw one on hemlines once as like a leading indicator of the strength of the US economy. And I'm seeing them a lot more now on social media, which could be its own indicator, right? That
Yeah,
people are worried about it. So therefore there's a lot of content being produced on it. I'm not sure.
if you are using the strip club index to make your investment decisions, you deserve everything that you get in your portfolio.
Apparently,
Period. End
though,
of
it's
story.
very reliable, Nate. It's very reliable.
I always, this won't surprise you. I love the saying, pessimists sound smart, optimists make money. And that's what a lot of that stuff reminds me. It's very easy to go out on social media and tweet all this doomsday stuff or recession's coming. That's actually the easier thing to do than to just remain optimistic longer term and
Yeah.
ignore some of that. And again, you don't want to have your blinders on. The pessimists do tend to sound smart. But I don't think they make a lot of money.
Well, speaking of, because we're going to be rolling right into the next topic around downside protection, which everyone might need. So ARK Invest has filed for 4 new buffered ETFs that are going to be offered downside protection. As I mentioned, 50% downside protection, gains only after the first 5%, at least to the upside. So we have ARKI, the ARK Q1 Defined Innovation ETF, the ARK Q2 Defined Innovation ETF, which is ARKJ, ARK Q3 Defined Innovation ETF. Everyone can, I think, hopefully see the theme here, which is ARKL, and then ARK Q4 Defined Innovation ETF, ARKM. So this is just ARK, ARKK, with downside protection, limiting some of those losses, which I'm going to reserve some of my thoughts because we've talked about ARK before and we've talked about the extreme losses that ARK investors, depending on when you bought, but there have been a lot of losses inside of ARK. And I think some folks have been wondering and waiting when ARK was going to kind of deliver some of these promised returns because it was supposed to be around like disruptive new tech innovation, all these like hot button things that we talk about, world of AI, etc. And then for it not to perform, I think the way that people wanted has kind of left perhaps a little bit of a slight sour taste in some investor mouths. So yes, that's my background and context setting. I have to hear your thoughts on this. So it's essentially
I
ARK with downside protection.
Yeah, I think I have a couple of hot takes here. And also, just to be clear, I think you described this well, but what these ETFs do is they offer protection from losses greater than 50%. So in
Yes.
other words, once you reach 50% drawdown in ARKK, the ARK Innovation ETF, that's the reference asset here, it protects from losses beyond that. I just want to make sure that's clear. But
Either way, you only get up to 50% downside protection with your ultimate.
Well, no. Yeah, you're saying if it goes to zero.
Yes.
I'm saying that,
Yes.
yeah, it's
And
not
that is it.
going to protect you from
No.
the first 50%
Yeah.
of
No.
losses. It's anything beyond that. But okay, a couple of things. First, I think I feel the same way about these ETFs. If you remember, we talked about the Bitcoin buffer
Mm-hmm.
ETFs that came out.
No.
Here's why, though, because I see the volatility of ARKK
Mm-hmm.
as a feature. That's not a bug. Just like I said with Bitcoin, right? Like if you're allocating to disruptive tech or you're allocating to Bitcoin, the expectation that you should have as an investor is that you're going to get some wild swings back and forth. Like that's what comes along with those.
Do you think investors think that though? Because I don't.
I do.
I
But
actually don't think investors have that expectation for some reason.
but then I would say you shouldn't be investing in those asset classes
I
if
I
that's not your
actually think
expectation.
I actually think, I mean, granted, I think a lot of investors do think that way, but I actually think, at least based on some of the commentary that I've seen, a lot of investors are actually treating Kathy Wood and also like some of these funds as almost like an oracle for what's coming next and to get in. Do you understand what I'm saying? Like it's
I understand what you're saying, but I'm
grabbing
saying
like
what
the
comes
next
along
big
with
thing.
that is volatility. Like
Yeah.
if you're trying to look out into the future and invest in innovative technologies, what happens? You're going to have some that are complete home runs and go to the moon, and you're going to have other that are complete failures. Like that's what happens in disruptive tech. That's part of the equation when you're investing. And I would say maybe not, maybe it is the exact same thing with Bitcoin. I don't think Bitcoin's going to zero. Um, I think it could still be a moonshot, but you could have a lot of volatility in between. But let me frame it like this. First of all, on the surface, I do think it looks enticing to only give up 5% to the upside, right? You're giving up that first 5% to have protection from losses greater than 50%. So I think just if you look at the label, you go, oh, that's interesting. Here's the thing. How often do 50% plus drawdowns happen in ARKK? That's going to be pretty rare. I was looking back and this could be, don't quote me on this as being accurate, but I could only find one time that happened in ARKK since its launch in 2014. That was actually down point to point more than 50%. And maybe there was another occasion or two, but we're not talking like this doesn't happen every day. So you're giving up your first 5% upside for something that doesn't happen very often. The other thing that I would say here, just taking a step back, is one thing that I've always admired about Cathie Wood is that she has stuck to her knitting. Even when ARK had that large drawdown, she didn't waver on her strategy. You know, they took in a boatload of assets, and I feel like it would have been very easy for her to maybe waver a little bit and take a different approach because she had all these assets. She didn't do that. She kept investing in these quote unquote disruptive tech companies. And so for ARK to now launch these buffer ETFs, you know, this is ARKK with guardrails, that feels a little bit to me like she's wavering, right? Like either if you're ARK Invest, you're an active manager, we invest in disruptive tech, either you have full conviction around your strategy or you don't. And I would
see
say
that, but I also think that this is part of the fact that people
sure, they're just trying to make
I don't
money.
necessarily hate buffered ETFs. I just think that for most young investors, it's not really necessary. I don't know
Right.
if the downside
And
protection
do you
is
think
worth the
younger
upside
investors
tax.
yes, and do you think younger investors like to invest in disruptive tech? I think the overwhelming answer would be yes, more
Yeah,
so than
right.
older
But
investors.
I
So
think this is appealing to those investors that has been an explosion of these structured ETFs lately, over the last year.
so maybe they'll find an audience. Maybe we're talking about two different things here, and that, you know, to your point, there is an audience. They want exposure to disruptive tech, but they want to know the worst they can do is lose 50%. Sure, maybe there's an audience out there like that. But also, I just feel like this doesn't align with ARK's
Yes,
public-facing philosophy
I
overall.
would
And I
agree with
do,
that.
yeah,
It
and
doesn't,
I
it
do
doesn't
wonder,
align with their brand and
right,
their ethos of the investing strategy, which to your point is like, no, we're sticking to our guns. We're going for this disruptive tech. There will be down days because that's what happens when you go for something new and interesting
100%.
and different. You never know what's going to happen, but we're investing in the future. And so we're not going to be swayed by the short-term volatility. And I mean, true to form, right? They're going to have moments where they look like geniuses, or everyone, the media kind of portrays it that way. And we had that most recently, right? With the Circle IPO. They made an absolute killing on it. And you're going to see that periodically. I think that that's the whole entire point, right? You're going to
That's
be
where I was
capturing.
saying, I mentioned like going after the money. I don't mean that necessarily in a negative way, like in terms
Yeah.
of ARK trying to capitalize on a ETF segment that's doing really well. Because to your point, they hit a home run with Circle. And if you actually look at the performance of ARKK going back over a year, it's up something like 55%.
I actually have the performance chart up right now. So 3 year, we've got 67, or sorry, 3 year, 3 month, 67%. So that's capturing the Circle gains. A year to date, we're up 24, 1 year, 53, 3 year, it drops to 15%.
Right, but here's what I was going to say. So yes, that's great performance. But if you look at flows now, like pull up flows, ARKK has had over $2 billion come out of it. It's had $2 billion in outflows despite that performance. And so what I'm wondering and
Yeah,
trying to think,
the
why
last
would
year,
ARK, yeah, so
2
I'm
billion
trying
of
to think, okay,
outflows.
right. So when you think, why would ARK pursue these buffer ETFs? I wonder if they are just looking for other ways to bring in investors because they're
Right.
having these outflows from ARKK. That's the only thing that makes sense to me.
I actually think that the flows stories are actually much more interesting when it comes to ARKK because I do frequently see every time I pull up the fund flows chart or flows chart for ARKK, there tends to be more red than green that I see.
I saw something. I think they're on pace. We'll see what happens in July for 19 straight months of outflows.
And
19.
so, I mean, so think about that. So
Yeah,
to me, then coming up with a buffered ETF suite to capture to capture back some of that just makes sense on some level.
sure. And I think again, we're saying the same thing. I just don't, for me, I always like the fact that ARK, is what they said they were. And this just feels like it goes against that a little bit to me.
Well, I'll see what happens with the flows for some of these buffered ETFs. I think that will be a very telling sign going forward. If they're sort of this strategy that we're trying to guess at actually works. All right, let's talk crypto, your favorite topic. So the SEC has taken its first steps towards creating this framework governing crypto ETFs. I don't have all the full details of what's in this framework. I think the bigger story is that they've even created one, more than what's necessarily in it at this particular time, because that's going to be set to change. Because we do have, I would say, a parade, maybe a flood, a deluge of crypto ETFs that are literally sitting on the SEC's desk waiting to be rubber stamped and hit the market. I'm not sure if you have more details on like what's in the framework as of right now that you want to share or that you can share.
Yeah, I mean, I'll just keep it high level. I mean, basically what they're trying to do is streamline the entire registration and approval process. They're essentially mapping out what the disclosure should look like on these products. They're working on generic listing standards. What they want to do, because of this deluge of filings that's out there, they want to make it easy, I think, both on themselves and the
Mhm.
SEC staff in processing these, but also make it easy on ETF issuers and just say, okay, here are the rules we have in place. If you're bringing a spot crypto ETF to market and you meet these rules or you've abided by these rules, great. After 75 days, you can come to market, sort of like a normal
Mhm.
process that doesn't look for a rule change on an exchange. I think it's fantastic. I mean, that shows you where the SEC is heading, and that clearly, in my opinion, all of these things are going to be approved as long as you meet their criteria. So this is bullish on crypto ETFs overall. But there are a couple of points that I would add here that transpired over the past week that I think are relevant. And the first is, and we talked about this if you remember on last week's show, the launch of this Rex Osprey Solana plus staking ETF. So that actually ended up going live last Wednesday. And I won't get into the weeds here because this gets pretty wonky, but let's just say Rex got very creative in getting that through the SEC. And I think
I
that,
can see the air quotes. Oh,
yeah,
there we
and
go.
little confetti. And so I don't necessarily think the SEC liked that approach, but there wasn't
Yeah.
a whole lot they could do. I mean, they can stop anything, but I think that Rex had all their I's dotted and T's crossed, and so that had to come to market. Point being, I think the SEC would much rather say, here's all the rules of engagement we have for crypto ETFs. You don't have to get creative. Here's what we want to see, and then it can be
Yeah.
approved. The other thing that was interesting that I have to mention is the SEC Division of Trading and Markets. They actually approved, or they issued an approval order, I should say, for the Grayscale Digital Large Cap ETF, ticker GDLC. And then I don't know if you saw this. It was maybe like a day or two later. Um, that order was actually stayed by the SEC. In other words, it means it was temporarily
Pause.
paused. Um, and so GDLC is sort of in limbo right now. We don't have a lot of details around exactly what happened here, but I bring that up because that gets into this whole rationale for why the SEC would want to have a framework in place. Clearly, there's something going on behind the scenes to where you have the SEC Division of Trading Markets saying, yes, this is okay. And some other aspect of the SEC is holding this up from coming to market. And so that, again, that just screams we need a framework in place
I
for
mean,
all this.
yeah, there's just so many for them to.
Here's the thing, though. We don't know how long all this is going to take. Like I saw something, this could take a few months to have this framework actually implemented. And if that's the case, we likely won't see any spot crypto ETFs approved until then. And so I'm a little dismayed because if you remember last week, I talked about the crypto ETF summer. Do you remember this?
Yes.
that
Your
might be on pause.
prediction has been ruined now with this.
I'm not ready to fold on it yet because I also saw something that Solana ETFs could be approved before then. So I'm not giving up on that yet. And maybe the SEC moves a little quicker than what some people are expecting. So maybe it'll be crypto ETF fall, which just doesn't have the same ring to it.
I think that they will move quite quickly because of
Hopefully.
the next story, which is the Trump media crypto filing. I mean, okay, let's talk about it. So we have Trump Media filing for its third crypto ETF. Now the fund is going to hold Bitcoin, Ether, Solana, Kronos, and XRP. Yeah. But about 75% of the fund will actually be Bitcoin. So it's not evenly split. It is going to be overwhelmingly Bitcoin. I don't think with the president's vested interest in these crypto filings coming to market that you're going to have an SEC dragging its feet on approvals or on developing this sort of framework personally, which I actually think is part of the problem that I personally think with this filing in the first place. I don't think that politics should be mixing with this sort of stuff. I
You
think
don't like the
it's
potential conflicts of interest here.
I don't think there's potential. I think there's blatant conflicts of interest. That's not
So,
even
so funny. We're
political statement. I
bookending.
just think that's a thing, you know?
Sure. We're bookending our show this week with Trump talk. Started with the tariffs and now we're on crypto. He's got his hands in everything. You got to give him credit. Like
Yeah.
he runs. I don't know when he sleeps. I'm not going to touch the conflict of interest thing. I hear you. I try to stay
Fair enough.
politics free. So not that you don't have merit there. I'll stay away from that. Yes, I think the fact that Truth Social is filing for this ETF, you have to be bullish on just
Yeah.
approval and where the space is going. I think that's an obvious conclusion here. You and I talked about, don't forget there's this Trump meme coin ETF filing that's still out there. And
That's
I know we laugh, but like, are you really going to be the SEC commissioner who denies that? So to your point on, potential conflicts.
not if you want to keep your job. You're not.
Yeah, not if you want to keep your job. So I'll take a step back here and say, I think that this filing is just indicative of the fact we're going to see a wave of crypto index ETF filings continuing to come to market. I think we'll also see a number of actively managed crypto ETF filings. And I'm really optimistic on this particular category overall. I think the spot Bitcoin ETFs, they've had so much success. I think it's going to be tough for some other crypto category to supplant that in anytime soon. But it would not surprise me to see crypto index ETFs, uh, be the number 2 category in terms of assets overall.
Yeah.
And I think it'll happen sooner rather than later. I just think investors like the idea of diversifying across multiple crypto assets.
I do think that it is a little interesting though that for some of these crypto ETFs, you don't even have spot ETFs for them yet. It's going to be for a lot of investors, not necessarily the only way to access these assets, obviously, but I think like the easiest way for sure for them to access
Well,
these assets.
yeah, I thought that maybe that would be the case when I saw the approval order for the Grayscale Digital Large Cap ETF I mentioned, but now I'm not so sure. Now I wonder if individual spot ETFs will be available on these at the same time the crypto index ETFs are approved.
I mean, I
And
haven't
that
heard
gets
of
back to the
Kronos, spot
framework.
Kronos ETF filing.
I think I want to say
Might
maybe
exist. I just
I
haven't.
think Canary Capital might have one out there. I can't keep track anymore. I used to track these things like a hawk, and now there's so many filings out there, I can't keep up
But also, I don't think
anymore.
anyone really wants to go down and buy every single spot ETF.
For
Like
sure. And
it's
that's my
too long.
point.
Yeah.
100%. And that's why I think these index-based or actively managed ETFs are going to have a huge audience, because I think you're exactly right. How many of these do you want to own in a portfolio?
I'm just waiting
It,
for the buffered crypto ETF. I am. I'm bringing it back. This is a callback to earlier in our show. I
you
am.
said tariff fatigue. I think I have buffer fatigue, buffer ETF fatigue.
I mean, that makes sense. There's a lot, and I don't. I am. of the position and of the opinion that if you can shove it into a buffered wrapper, I think we're going to start seeing that for very volatile assets that you should be investing in, knowing that it's going to be volatile and just being okay with that. So I think that there's no world we live in where there's not going to be a buffered Bitcoin ETF. I don't see
There
that.
is one. No, no,
Well,
we
I
already
mean,
have
yeah,
one.
like, yeah.
Calamos has them. Yeah.
But I mean, and sorry, beyond Bitcoin, that we're not
Yeah.
going to see like every single crypto asset having a buffered ETF, and then even, you know, like a buffered Trump crypto ETF. Like that's coming. After this one, there's going to be a buffered version for
I
sure.
agree.
I
I
don't,
agree.
I
I
don't.
wish I could debate you on that, but I can't. I think you're 100% right. It's more
Me and
what is
my,
called boomer candy coming to market.
yeah. And with that, we'll end this week's episode. If you want to let Nate know that you object to his thesis about your age and cryptocurrency, of course, as always, let us know. Can reach out to us on social media, and I'm more than happy to read your loud complaints on air next time. That was all for this week's ETF Pulse episode. Thank you so much, Nate.
Thank you.